Hello, everyone. Welcome to Switch Markets Live. Today is our Wednesday workshop. We're going to cover the 5-8-13 EMA Crossover Strategy. I'm going to show you exactly how to set this thing up on MT5 and also on TradingView. And then we're going to look at maybe making a few trades live after we go over the rules. I'm going to show you where to find the video and the full tutorial and field any questions that you may have. So I'd like to welcome everybody back to the live stream here. We're starting to integrate and really work towards building that Switch Markets community with the How to Trade community as well. And I think for today, we've got some key events coming out later today. The FOMC minutes are a big deal, but we're going to go ahead and go with this workshop. I get a lot of questions about the 5-8-13. It's a fantastic way to trade. You can trade it on short time frames. It's also great for beginners. If you're a brand new trader and you really want to just get up and running with a strategy, the 5-8-13 isn't necessarily the worst thing you could do. So I want to welcome everybody back. It's been an interesting week, really sort of very sluggish here in the United States as far as folks actually going to work and doing things that they should do. It seems like every time I turn around, there's somebody outside the house just out on holiday. So we have seen some action in the markets. I think it's a great time to trade. Today we're going to trade the US 30. We're going to trade the US 30 on the 30-minute chart using the 5-8-13. We're also going to look at gold and U.S. oil, so a couple commodities and some equities. We might even look at the U.S. 100 and 500 as well. I do believe we're going to get some nice big moves there. So, Team Marina, good to see you. Team Marina, good afternoon. Welcome everybody. I'm sure that you're doing well. I'm doing very well, so I'm happy to be here. Let me see. We had a question in the live chat here on YouTube. Min Gandharba, you're going to have to always excuse my pronunciations. Some of these names, I'll do my best with them. But right there, well, Min, hello, brokers. I want to withdraw in my profit. Please help me. I'm formed. So what you need to do is you need to go right to the broker itself, and you're just going to go to that live support right on the front of switchmarkets.com. That should be able to help you. All right, everybody, 5-8-13, this is one of the strategies that we've put out. We're going to cover a lot of these in workshops coming up in the coming weeks, but the 5-8-13 is one that we came out with a few months back. Pretty good video there, so if you're interested in actually watching the video itself and getting in on the full tutorial, you're probably going to want to check that video out, and it's a short one. It's only about 4 minutes, 37 seconds, so you can get in and out there under 5 minutes and have a pretty good idea of how to trade this strategy. Today, we're going to go into more depth. We're going to show a little bit more depth and really try to expand on the concepts presented in the video, but also just give you a quick rundown of exactly what we're talking about when we talk 5-8-13. Remember, if you're not watching us on Switch and you're over there at How to Trade, or you're seeing us on YouTube for the first time, Switch Markets has pretty much everything you need. To get up and run in thousands of markets. We've got the leverages there. The spreads are tight. You can also have very, very low minimum deposits, so you can get up and run in here with just a few bucks. So if you're interested in getting in the game on the live feed, or in a live capacity, you definitely could do so on Switch Markets. I think that for men, what you would be looking to do here is you'd be looking to probably contact the live support team to get a little bit of help there. Let me see. Team Marina Shane, is the Trading Journey channel still active? Yeah, it's still active. We have a lot going on right now. The How to Trade Comp channel is active. The Forex Signals TV channel, not as active, but we're still live streaming there as well. And then this Switch Markets channel is also going live, and you can catch these live streams on a lot of times we do them on X as well and LinkedIn. So if you're interested in getting up and running with a strategy, or if you just want to learn a little bit about trading, feel free to check out some of our resources and our assets. Is the Trading Journal channel still active? Yeah. It is. We're doing our best with it, but we are in a transitional phase right now. We're still going to deliver as good a content as we ever have. It's just going to be probably a little bit more spaced out. All right, here we go. 5-8-13. This is going to be a crash course in brain surgery. This is going to be a crash course in trading EMA crossovers. Now, I love simple. Everybody, I love simple. Simple is the best. And if in fact you're going to trade, and if you're interested in trading, I highly recommend keeping it as simple as absolutely possible. My strategies that I use, they're not necessarily the easiest things in the world, but to me, they're very simple and they're very intuitive. That's what you're going to need out of a strategy to make it work. You're going to have to keep things as simple as you possibly can. And if you can do that, you're going to have a chance to succeed. So the strategy rules for the 5-8-13, easy. There's 3 of them. When the 5 crosses the 8, you're going to look to trade. Now, when the 5 crosses over the 8 EMA, you're going to look to go long. When the 5 EMA crosses beneath the 8 EMA, you're going to look to go short. Now, here's the thing that's very important that a lot of traders mess up, And I don't want anybody to mess this up because this really is the filter. This is going to be the filter on getting into this trade with a little bit of confidence. Now, we're going to talk a little bit about confirmation in a minute, but for right now, price must be above on a buy, all 3 EMAs, and below all 3 EMAs on a sell. If you can do that, if you get that set up, then you have an opportunity to buy when price is above the 5, the 8, and the 13, and you sell when price is beneath the 5, the 8, and the 13. It has to be beneath all 3 moving averages. Now, most of the time it is, but the reason why we put that in there, why we put the 13 in there, is the 13 gives us a great idea of what the market is doing at a macro level. Now, the 5 and the 8 EMAs are great. They're just really short periodicities. You're only talking about a duration of 5 bars or a duration of 8 bars. And what you really need is you need some baseline way to stretch out, to really put price action into a meaningful perspective. And that's where the 13 EMA comes in. For me, the 13 EMA is everything. I trade that exclusively. I match it with my Fibonacci's, and it's a big part of my strategy. I think the 13 being included in this, it's a fantastic idea. 5, 8, 13 is a pretty powerful scalping strategy, and we're going to go through just that. Now, remember, in order to get in the market, we've got everything lined up for us. 5 crosses the 8. We're either looking to buy it or sell it. All right, as long as price is above all 3 or below all 3, then we can pull the trigger on the trade. But remember, you're going to buy or sell the market on the first bar close. Now, there is a little bit of nuance there. You can wait for retracements after the entry. We did a video on that, the Fibonacci retracement levels using the 9 EMA. You can do similar things with the 5, 8, 13, but for right now, we're going to keep it very, very, very simple. All right, so those are the strategy rules. Pretty easy, huh? And then you're going to go right here. This is a good illustration of what the trade's going to look like. You can see nice big bar. The bar closes beneath all 3, and you're going to go ahead and grab that short. That's what it's all about, guys, is just getting in there, being aggressive, trading your rules. All right, let's get these things set up. Let's get them set up on the MT5, and let's also get them set up. Well, I mean, we're going to have a pretty good opportunity to trade TradingView, but let's go ahead and start with MT5. Now, when you get involved with the markets, the platform, I will just tell you right off the bat, to me, it's not that huge of a deal. If you're trading on MT5 or MT4 TradingView, it really isn't that big of a deal to me. I believe that fully you could trade each one of these platforms and you should be able to do it seamlessly. Now, typically, most of the users on Switch are using MT5. And the reason why is that's sort of that's going to be your featured platform over there at Switch Markets. So if in fact you're in that brokerage and you've got an account there, more than likely you're doing business on MT5. Now, that's potentially going to change here in the near future. There's all sorts of talk about bringing in TradingView, which is what I use on the live streams just because I'm fast at using it and I understand where all the tools and indicators are. I've been with TradingView for so long that I just know how to use it. But a lot of you feel the same way about MT4 and MT5. You've been trading on it for years. There's nothing wrong with any of it. Just be consistent. I'm going to show you how to get started here on MT5, though. It's not really that difficult. You're going to go up here to Insert. You're going to click Insert. You're going to go to Indicators, and you're going to go down to Trend. As soon as you get to Trend, you're going to go right down to your moving average, which is right here. Now, you're going to just pick the basic moving average. And the reason why is you're going to really denominate what type of moving average you want within the moving average shell menu. So right there, you're going to go ahead. You're going to hit exponential. Okay, you've got an 8 moving average. A couple of tips. You're going to apply it to the close. We're just going to leave it on the close for right now. Now, there's a lot of different ways to build moving averages, but for right now, we're just going to use the close, and you're just going to add it to the chart. So you're going to go ahead and go OK. So there's your 8, and you're just going to do this twice more. That's about all there is to it. You're going to go to Trend. You're going to go right down to moving average. I highly recommend changing the color. So let's go ahead and put a 5 on there. I always like my shortest time frame to be in red. So let's go ahead and go 5, exponential close. Then we're going to go ahead and go OK. Okay, you can see where our 5 and an 8 is. And then the last one we're going to put on there is our 13. So you're going to go down to Trend. You're going to go right down here to moving average, and you're going to plug in a 13. That's going to be a 13 periodicity. That's going to be the longest one that we're going to use. I typically always use blue for my moving average there, my 13 period moving average. But we'll just use turquoise for right this minute so we can easily see it. Now, the whole idea here is so we can easily discern where the crossovers are. So I typically like to go with red for my 5. All right, so when my 5 crosses over the 8, I'm watching the red the entire time, and then we're watching price. So right here would have been your crossover. The 5 crosses over the 8, And that would have been your entry point right here on this U.S. dollar this U.S. dollar Japanese yen chart, 15-minute. And this is historical data. This isn't live. We're going to go over some live trades right now. So essentially, that's what we're talking about when we come to MT5 to get set up and running. Relatively simple, guys. Just remember, those moving averages are under insert, indicators, and under trend. And then you just pick your settings, the 5, 8, the 13, and then you make sure that you color them, color code them, and you're up and running. You're in business. So something like that, relatively useful. So what we're going to do now is I'm just going to sort of focus on TradingView because it is relatively easy for me to trade, and we don't have to sit around waiting for much time. We don't have to waste much time with me trying to figure out which buttons to place trades and all that jazz. So you have to excuse me. My mouth is very dry. It's been actually hot here in Dillon, Montana, which surprises me. Typically around Memorial Day, it's always raining, but we had fantastic weather. You can see the tan. The tan's coming in nicely, but the throat is definitely dry. 5,200 square feet, a lot of pollen in the air, a little bit of heat too. So I'll have to be hitting my water here today. All right, let's trade it. Relatively straightforward. 30-minute US 30 chart. Now, a lot of folks don't like using the 30-minute chart because it's too long. The time frame is too long. Let's see, Yusef. Good to see you, Yusef. Hey, how you doing? What you would like to do here on this particular type of a trade is when you're trading the 5, 8, 13, the pro tip, it's very important that you're trading when the market is live. The market needs to be live, which means it needs to be active. We've got to have participation. We've got to have volatility, and we've got to have market depth. With the US 30 and the US indices, you have those things during the US session. So if, in fact, you want to trade something like the US 30, I love the 30-minute chart. To me, it's the time frame that I would be starting at. And then right there, opening bell, ding, ding, and you can see what happened here. There's your crossover, 5 crosses over. Price is beneath all 3 moving averages. You probably could have sold right there. More than likely, you'd be selling down in here, though. It's more clear cut. There's your crossover there, and that crossover wouldn't really form until this bar closes. So right now, theoretically, you're looking to go short. Now, I'm just going to go ahead and throw this down. I'm going to show you exactly how to execute the trades. You're going to go ahead and sell it. It's not going to be a limit order. You're probably going to be using market orders here just to get in the market. Now, you'll notice right there, we probably wanted our entry point somewhere right around that bar close, that big negative bar close. That's probably where we wanted to be involved. But that's okay. We're not going to catch everything in real time here. But what we can do is we can line our trade up. So you say, Shane, okay, I've got my entry point right in here, okay? I've got options. You just have to remember that each and every trade, you got to have 3 parts to a trade. You got to have an entry point, you got to have a profit target, and you got to have a stop loss. For me, personally, I like the broader market state. I've always sort of leaned towards really putting stops above these swing highs or below these swing highs for a buy. But something like this, pretty good trade. If, in fact, you find yourself getting extended on these bars, you could also do this. You can put the stop loss right above your signal bar, and by doing that, you're going to give yourself a chance to catch the move. So if we've got our stop loss in there, let's just go ahead and play tight. We're going to put it right there at 42,317. Now what? Now what do we want to do? You've got a couple of options. Now in the video, I talk about static risk versus rewards. You could definitely be looking to do something like that with just maybe a 1-to-1 or a 1-to-2 or a 1-to-3. Remember, this 5, 8, 13 sort of a trend following approach. You probably could do something like that on a 1-to-2 basis. Now I recommend your risk versus reward has to be at least 1-to-1. If it's not 1-to-1, don't even bother taking the trade. You've got to be at least at 1-to-1. Now, 1-to-1, most traders don't like it. They say, listen, I don't believe in 1-to-1 risk versus rewards. I like 1-to-2s, 1-to-3s. You can get away with 1-to-2s and 1-to-3s in this type of a strategy. You see right here yesterday, what did you have? You had really just a huge bullish trend, and you absolutely cleaned up on the market. So today you're trying to do the same thing just to the bear. Now the real question that we have is, how can I manage these trades? Do I have to use just static risk versus rewards like a 1-to-1 or a 1-to-2 or a 1-to-3? And the answer is no, you don't. You can take a completely dynamic approach. You can go completely dynamic, meaning you're just going to depend on what the market's telling you to do, when to get in and when to get out. And what that would really be based on, it would be based on grabbing your crossover here and then just getting out of the market when the 5 comes back down over the 8 and you get the bearish close, in that case, beneath all 3 moving averages. So the idea there would be to catch the entire move And the way that you would do that, the way that you would get that done is by just taking the position and leaving it on until you get the crossover. Now, one thing I highly recommend is if you're going to do things like this, know your market and know when you need to be trading it. If you're going to trade the U.S. indices, focus on the U.S. session. You don't have to, but just remember that's where the most volatility is. That's where the most participation is. You're going to have a better chance of getting a move during that U.S. session for the equities than you will, say, during the overnight. Let's say you're going to trade the Japanese yen. Well, maybe you want to start trading that right around the Tokyo Open. You've got to use your head a little bit. You want to use the Great Britain pound. You want to trade the pound. Probably going to be looking at the London Open, the London session, the London U.S. overlap. So there is some nuance there to when you need to be trading this and when you don't. From a perspective of staying out of trouble, markets like this will absolutely crush you because you just don't get any moves. And you'll notice, just a real flat trading day. We made a video called 3 Times Not to Trade EMA Crossovers. What do you think happened right here? It was a holiday in the U.S. So these derivative products were still trading, but there wasn't really much emphasis on making a move. There wasn't anybody in the market. So this area right in here is something you need to avoid like the plague, especially if you're trading crossovers. You can't trade them when they're dead. When the market's dead, if you're trying to trade crossovers, you're going to get hurt. There's no question about it. You will get hurt. So we want to focus on when the market is at its best. Typically, you're looking at U.S. session for U.S. equities. I can think you can go a longer time frame and get away with trading maybe like a 4-hour chart for gold, but that's when the 5-8-13 becomes more of a swing trading strategy. All right, let's take a look at it and see if we can get another trade here. Okay, so the gold market, you can see we've got a 30-minute gold. I like 30-minute gold. I would start a little bit earlier in the trading day. I would probably start during the mid-London session. But if you were, in fact, awake in the UK, if you're in the UK and you want to trade that London session, that's not a bad time to start trading gold. It really isn't. A tremendous amount of gold is cleared through the London coffers. You're definitely going to be in a position maybe to grab some moves. Definitely possible. So I still like the London U.S. overlap here. I think that's a great time to be trading this shortly after the U.S. Open till about, I don't know, what do we have, another hour or so, 2 hours of the trading session, somewhere in there, 30 minutes. I would have to look at my time zones. But you definitely want to be in this market when it's the most active. So if you're going to use a 30-minute chart, here it is. And this would be one of those where if we know when we're going to trade, right there it is. That's about 8 a.m. Eastern. There's your crossover. Your sell, probably going to be somewhere right in here, potentially. Crossover, bang, there's going to be your sell, bounces back a little bit. If, in fact, this wasn't your sell and the crossover doesn't set up clearly, then you've got a completely another bar to go in on, and you'd be short from right up there, right around 33.05. So there's a lot going on here with this trade and stuff, especially with the 5-8-13. The timing, I can't stress it enough. The timing is going to be everything for you. If, in fact, you want to be able to get the job done over time, you're going to have to understand when to trade. And I always say trade when the markets are the deepest and the most volatile. That typically is going to be the U.S. session, typically. But excuse me, if you're trading other assets, you can definitely sort of trade when it's local, when it's local time, when it's the best time to trade that asset. I'm going to show you what I mean in a minute. This gold chart's a great example of 30 minutes, you can make 30 minutes work for you. How about 4 hours? Maybe. Right there would have been your 4-hour trade, bang, bang, something like that. Just remember that these turn into swing trades on a 4-hour time frame. You're probably going to be in this trade a couple of days. Right now, you're still short and you're looking pretty good. Your entry would have been right there. There's your cross. So probably right there would have been your entry, grabbing that sweep. And here, you can see we haven't crossed back over. Bit of a retracement, but now the market's heading off here, and I think that you're probably going to be in pretty good shape to the downside on a 4-hour here with gold. So a lot going on there. You definitely, if you're going to trade the 4-hour gold market, I would begin right on the electronic open. So typically, U.S. futures settle somewhere around, I don't know, about 3 o'clock my time, so about 5 o'clock, 4:30, 5 o'clock in the afternoon. This spot gold market's going to sort of take a pause in the afternoon. So you want to be looking at the first 4 hours after that. You look at your 4-hour chart after that. But honestly, if you're talking about swing trading, the 5-8-13 and using a 4-hour chart, probably a pretty good idea just to start on Sunday's open. But, you can catch big moves, guys. There's no question about it. I mean, these are significant moves. I mean, that's an absolutely huge move right there on that cross. Right in there, bang, bang. I mean, it just takes off, goes to the moon, and that's what we're trying to do here. We're trying to get into the market and really be positioned in a proper fashion. All right, let's look at U.S. oil. Now, U.S. oil is one of these that you could definitely trade on very short time frames here, but you want to do it during the U.S. session. So if you're trading, say, the U.S. oil CFD, you can see right now you've got a nice 6 pip. What do you have, like a nice 6 pip spread? So it's not the biggest spread in the world. You could just jump in and start trading it. Now, how would you do this on a 5-minute? There's your crossover right there. So if that's your crossover, what are our other terms? What else has to happen? Price has to be above all 3 moving averages, and it is. And it's moving higher. So you would be buying. You would have been a bidder right there, right around 61.85. If, in fact, you wanted to take that trade right now, you probably could. So we'll just go ahead and buy market and get us in. You'll notice right there, you're always, when you place market orders, you're always going to get the worst price, always. It's just the way that it is. So if you're going to play with market orders, be careful or trade something with a real tight spread. Now, this is a 5-minute chart. So the question for me becomes, what's price doing and are we in a good trade location? Do we have a chance maybe to get a good rally out of this or not? Well, one of the ways that we can do that is establish confirmation. Now, what confirmation is, what does confirmation mean? Let's just take a look at it. In technical analysis, confirmation refers to the use of an additional indicator or indicators to substantiate a trend suggested by one indicator. Since technical indicators are not perfect predictors of future price movements, a trader often feels more secure deciding to act on a signal if more than one indicator is sending the same signal. Now, I'm a big fan of just using the 5-8-13 as its own little indicator package. You've got 3 separate indicators there. You've got the 5, the 8, and the 13. Now, granted, they're all moving averages, but that doesn't necessarily mean that you can't look at that, maybe that 13 EMA as being your indicator. That's your trend indicator. If price is above the 13 EMA, you're probably going to be looking to buy it. If your price is below the 13 EMA, you're probably going to be looking to sell it. Now, if you want to add an extra indicator, it's really the same one that I add almost to all of these systems because it's easy, and that's going to be the relative strength index. So let's go ahead and we'll add the relative strength index to our U.S. oil chart and see if it gives us any help on making a decision whether to trade or not. So right here, if you are in fact going to use TradingView, you just go right down here to RSI, give it a click. As soon as I can find it, we'll get it going. Relative strength index right there. Now you'll notice that you can't really see the settings, so I'm going to show you the settings right now because it's behind my picture, but this right here, it's easy. The RSI is going to be very easy. We're going to keep all the factory settings, meaning the RSI length is 14, the source is the close. We're not going to think about smoothing. We're not going to worry about time frame calculations. We're going to wait for the time frame to close. That means that bar, we're going to get a fresh RSI reading at the end of every bar. That's what we're looking for as scalpers. Remember, our entry is going to be on a bar close. So we need to have our RSI sort of dialed in and ready to rock on a bar close as well. That's about all there is to it. So we just added the RSI. What does the RSI tell us? It's very simple to read. If the RSI is over 70, you're in overbought territory, you're looking to sell the market. If the price is below, if RSI is below 30, it means you're in oversold territory and you're looking to buy the market. And if in fact we can get that RSI outside of our band, our envelope, then we have a much greater chance of potentially getting in on a volatile market or potentially a move. Now, what is this RSI showing us right here? It's basically telling us that we took a really a higher risk trade than we would normally take. Why is that? Well, the RSI is sort of right around 50. And if you're right around 50 with the RSI, you're going to run into trouble because that means the market is in rotation. The market's flat. It's not really moving. It's not trending. Typically, you want to be using this as the RSI needs to sort of be your trend indicator. And if you can use that as an opportunity to confirm the 5-8-13 where it is with respect to the rest of the day or earlier in the morning, then you're going to have a better chance to succeed. Now, I don't necessarily believe you need to use RSI on every time frame. I don't think you need to use it on the longer time frames like the 4 hours or the dailies. 5-8-13 on a daily is a great swing trade, really a great swing trade tool. Do you need it on a 5-minute chart? I would say, yeah. Do you need it on a 1-minute chart? I would say, yeah, you do. And the reason why you need it is you need that added confirmation to make sure that you're not just getting lost in the price action of, say, a 1-minute chart. I see traders do it all the time. I've been guilty of doing it myself. You end up thinking a market is trending when it just isn't. When it just flat out isn't. And that's easy to do on a 1-minute chart. It really is. It's easy to get caught up and go, oh man, it looks like it's the trend of the world when you've only moved, 25 or 30 ticks, something like that. So I like the RSI. It gives us an understanding of where price is relative to where we've been over the last 14 periods, which typically on a 5-minute chart, that's going to be a pretty good cross-section of, say, the U.S. section here. I like RSI as an indicator. So right now we're sort of ticking higher, but you can see our spread really hurt us on this trade. We'll just wait and see how it pans out. It's really hard to say. Back to our US 30. Our US 30 is sort of in the money right now. It really does look pretty good. It looks like the US 30 is going to open up to the downside and maybe fill in some of this chain, this nice rally that we had yesterday. And if that is in fact the case, we're going to have a chance maybe to make a few bucks on that short. I like that short. I think it's a pretty good one. You just got to be sort of aggressive with what you do with regards to the rest of the session. Meaning if this thing goes $500 or $600 in the green, I don't necessarily know that you want to let it ride trying to get the big correction. But that's something you have to decide for yourself. Now the last thing I'm going to say about this approach, the 5-8-13, and I really got a great question earlier today over at How to Trade in the private messages. The biggest thing that we struggle with is position sizing. And the question really was, hey, listen, I started with a few $100 and I ran it way up. And then now I'm sort of taking big losses. Shane, how can you help me get some discipline and really be in this for the long haul? And what I say is your trade size, your position size is going to be what makes the discipline easy. And what I mean by that is if you're trading too big, you're going to get some big runs. You're going to make some money. But if you're trading too big and things don't keep going well, you're going to find yourself getting knocked out relatively shortly. So what I recommend is between 1% and 3% per trade. Now, it's not a lot of money. It's not a lot of money. I mean, even if you have a $10,000 account or a $20,000 account and you're looking at 1%, boom, let's go 10,000 times 0.01. You're only going to be looking at risking about $100 on a given trade. Now, if you're going with something like a 1-2 or a 1-3 risk versus reward ratio, then your trade, your $100 trade, could potentially be worth $200 or $300. That's pretty good money management. You're going to have a pretty good opportunity maybe to be successful over the long run there. Where you run into trouble is when you start putting the 5 and the 8 and the 10% trade sizes down. Now, a 10% trade size on a $10,000 account is $1,000. All right? So if you're going to risk $1,000 and you're looking to get a 1-2 or a 1-3 payoff, it's possible to make some nice money on each trade. The problem is you can really only miss a few times before your leverage, your margin, isn't going to be there to take these positions and hold them. So I really highly recommend, if you want to be aggressive, I'd say, okay, you can go 5%. But even that is very, very aggressive. And I would be careful with that kind of money management structure here on the 5-8-13, especially if you're trading with, say, a 5-minute chart or an 8-minute chart or a 3-minute chart or whatever your fancy is. The shorter the time frame, the greater chance you have of getting chopped up in these markets. So be careful with your leverage. Understand what you're doing. Respect your money. And if you do that, you could use the 5-8-13 potentially to make some nice returns. You really can. Now, remember one last thing. If you have any questions at all, be sure to ask me. Now, the ways that you can ask me, you can head over to How to Trade and send me a private message. I'm more than happy to do that. You just have to sign up for an account. It's free, so it's not going to cost you anything to send me a PM, and I'll be sure to get back to you right away. The other thing you can do is this live stream right here is going to be on the YouTube channel. You can just ask me a question right in that comment section. I'll go ahead and pin a comment on there as soon as we're done. And all you have to do is just write your question, ask your question there, and I'll be sure to answer it. And always remember to reference that 5-8-13 video. That's really what the whole webinar is about here today. And you can check that out over at the How to Trade YouTube channel. Check the video out. It's 4 minutes, 37 seconds. You can get in, you can get out. That's relatively quick. as far as, how complex trading can be. We broke it down pretty quick there. Let me see. Isak, great presentation. Easy to follow. Thank you. I sure appreciate you guys stopping by, and your feedback's always welcome. Good, bad, or indifferent. That's definitely okay by me. Okay by me. So if you have any questions at all, be sure to ask them in that comment section, which will be active here as soon as our live stream's over. All right, everybody, I want to thank you for joining me one last time. Have a fantastic trading day. Remember, the FOMC minutes are going to drop here in a few minutes, about noon my time, so about 2.5 hours. You're going to get that FOMC minutes release. That's going to bring some volatility to the markets. Over at How to Trade, I'm going to go ahead and send out a trade idea and break down pretty much everything. All right, guys, let me see. I got a couple questions from the How to Trade community. I'm sorry, guys, I just didn't see them. I was working a different chat about 30 minutes later. Dragon, seeing any counterpunch trades this morning? Not for right now. I don't particularly like trading during the FOMC minutes. I think we run into way too many problems doing that. But once again, my apologies. I'm not answering your question. I just got multiple live chats running here. And then here lastly, Dave F19, Shane, what is the yellow line on the RSI? You know what, Dave? It's a moving average of some sort. There's typically a fast RSI and a slow RSI. Don't worry about it. Don't worry about it. We're just looking at that 14-period average, and as soon as that gets out above 70 or below 30, then we're looking to make the play as opposed to the other line. Don't even worry about it. You don't need to. All right, you bet, Bobby Bob. You're absolutely welcome. Okay, guys, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow in the How to Trade trading room with the Thursday strategy session, futures, forex, and crypto, and we'll have some counterpunch plays for you then. I'm watching Bitcoin very closely. I think that's the most fascinating market right now, down to about 107,330. That could be a pullback buy. That may be our trade idea for later today. I just got to wait and see how the levels fall. All right, everybody, that's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.